All right. Thank you all so much for joining us. My name is Kaylin Hessel. I am the Advocacy and Outreach Manager for the Oregon Able Savings Plan over at the Oregon State Treasury. And today we are here as part of our Invaluable series to talk about banking and everything that goes into that. This is the fourth session of our series talking about personal finance matters, specifically for the disability community. So I have Nancy here with me today, and she is an expert in all of these banking things. So Nancy, why don't you tell us a bit about yourself? You are muted. Let me unmute you. Okay, try again.
Great. Thanks, Caitlin. I'm really happy to be here. I appreciate the opportunity. So I'm Nancy Yuill. I'm the consumer liaison with the Oregon Division of Financial Regulation. So I'll just tell you a little bit about our division, and then we can jump into the topic of the day. So our division is part of the Department of Consumer and Business Services. So we're part of the Oregon state government, and our division of financial regulation regulates state chartered banks and credit unions, consumer finance companies like payday lenders and pawn shops, and other financial services like mortgage servicers. We also regulate the insurance industry. And when we say regulate, what that really means is that those companies need to be licensed by our division, and then we make sure that they're following the Oregon laws. So we examine them every year, and we do investigations and enforcements to make sure that consumers are protected. So a big part of that role is we have a unit of consumer advocates who are there to help consumers when they're having a problem and they have a concern about a financial service provider or an insurance provider. So if it's okay by you, I do want to give the contact info for those consumer advocates. So if anyone has, great. So if folks have questions about financial service providers or insurance providers, they can call our advocates. It is free. They are there Monday through Friday, 8 to 5. And I'll say their number twice, and I'll say it again at the end as we're closing. So that number is 888-877-4894. That's 888-877-4894. And those advocates are there to help folks with questions or concerns that they have. They can also find our contact on our website, which is dfr.oregon.gov. So I am really happy to be here, Kaylin, because I love talking about consumer finance because it really helps people to be empowered when they understand how to make good decisions about their money. So I'm ready when you are to stop talking about banking.
All right, great. That's so good to hear because at ABLE, we are all about the empowerment. So let's start off with the basics. So there are banks and there are credit unions. What's the difference?
Right, excellent way to start. So the real difference between banks and credit unions is basically their ownership structure. So a bank is a for-profit company that's owned by shareholders. So the bank's mission is to bring as much return as possible to the shareholders. That's what for-profit companies do. Now, a bank could be large, it could be small, it could be local, it could be national. There's a real variety amongst the sizes and locations of banks. Now, a credit union is a nonprofit company that's owned by its members. And its members are the people who have the bank accounts at the credit union. So the credit union's mission is to benefit its members. So that often plays out for a member or someone who has an account there with lower fees, for example. That would be a benefit to the members. Credit unions can be large or small, and they typically define a geographical area they serve. So for example, a credit union might serve the Willamette Valley, or a credit union might serve the state of Oregon. They can be large or small, and the same way like a bank, They can have variety in sizes. But the thing is, both banks and credit unions offer checking accounts and savings accounts. They're both very safe places to put your money because they're insured by the federal government. And so your money won't be lost if something happens to that bank or credit union. So your money's safe and guaranteed. So either one is really a good place to think about putting your money.
Yeah. Can you tell us more about that insurance?
Sure. So in the case of a bank, they're insured by a federal corporation called the Federal Deposit Insurance Corporation, or FDIC. And so whenever you're thinking about, do I want to put an account at this bank, you're going to look for that emblem, that acronym FDIC, to make sure they're insured. What the Federal Deposit Insurance Corporation does is it insures every customer in that bank up to their money up to $250,000. So the idea is if something happened to that bank, and let's say, for example, it went bankrupt, the bank went out of business, your money is not lost. The federal government is backing it up to the total of $250,000. So you'd say, well, what does that really mean? Well, it means if you have more than $250,000, use two different banks, right? Spread your
Yes.
money around if you're fortunate enough to have that much money. Now, in the case of the credit unions, it's the same structure. That insurance is still there for you. It's just a different agency. It's the National Credit Union Administration. So still federal, still $250,000. It's just a separate agency for the credit unions versus the banks.
So for banks, we want to look for FDIC, and for credit unions, NCUA. Right?
Exactly. You want to look for that logo when you're on their website or visiting their branch, just to make sure they're insured.
Yeah, great. So within Oregon Able, we have both saving and investing options. Our saving option is the cash option, and that is FDIC insured as well, since those funds are held in a bank. So yeah, just like Nancy's saying, even if something super bad happens and you would expect all the money to be gone, it will not be gone. The federal government is promising that they will let you get your money back, which is really reassuring, I'd say.
Absolutely. Absolutely.
So, what exactly is a checking account, a savings account?
Sure. So both checking accounts and savings accounts are bank accounts. And really the difference between the two has to do with how you, the customer, want to use the account. So a checking account is really useful if you're going to have a lot of transactions on a regular basis. So let me give you some examples. Let's say you want to pay your bills using checks, or you want to get some cash out of the ATM on a regular basis, or maybe you want to go shopping with your debit card. All of those are considered transactions. And a checking account is designed to do a really good job making that easy, convenient, and low cost for you. So if you think that you're going to be using a lot of transactions, a checking account is a good bank account for that kind of use. Now, comparatively, a savings account is a really good place to put your savings that you want to have protected and you want to help them to grow. So a savings account typically has a little bit of interest on it that will help that account grow, but also its purpose is to store your funds safely so you can grow your funds. And it's not really for transactions. So typically you're going to find that in a savings account, they're going to limit, the bank or credit union will limit the number of transactions you can have in that savings account each month. I often see the number of like 6 transactions a month. It may vary bank to bank, because the idea is the savings account is where you want to safeguard your money so it can grow for future goals that you have. Whereas a checking account is where you're going to do a lot of transactions every month, and it's an easy and convenient way to do that.
Okay.
That's
So
nice.
earlier in this series, we talked about managing our money. So I just want to tie it back to
Mhm.
that. It sounds like a checking account is really a great place to do the active managing. Like you have your money in there that
Mhm.
is going to be coming in and out. So, you could put your paycheck in there, you could put money from Social Security, then you pay all your bills. You could choose to move some over to a savings account that try not to touch. You save it for emergencies, whatever your
Right.
big goal is. Um, and then use the rest of whatever is in the checking account for groceries or whatever else pops up that month. That sounds like a good way to balance those two.
Absolutely. They work really well together, like you've described. And also, I'm so glad you did a course on managing your money because a big part of that, as you know, is tracking where you're spending your money. And so, what I really like about my checking account is I can see every transaction. Basically, they're tracking it for me, and all I have to do is go online or get a bank statement, and I can see. And that enables me to compare that to my budget so I can make sure I'm managing it properly. So I really love doing that with my checking account. I look online. It helps me to keep track of all my transactions there. And then,
Yeah.
like you said, the savings, like when you link them and you can transfer the money into savings, you're like, oh, I'm growing my savings. And you can feel really good about that.
Yeah. And it makes it easy. And I think also
Mhm.
reassuring because if you're, trying to, well, so like with my checking account towards the end of the month, that number gets really close to zero, which can be kind of scary.
Mhm.
But I
Yeah,
know that I actually have plenty more money in savings, that I'm fine if anything bad happens, that this was my plan. It was supposed to get to zero because I
that's right.
know I will get my paycheck soon.
That's right. That's right. A great example. And if you run into a little problem and your money's in your savings, it's very simple to transfer it to your checking. So that can also help you feel a little more safe about, wow, it's getting really low. What if I have an extra expense I didn't know about? You can link the two, which is also great.
Yeah.
And Kaylin, you talked about direct deposit, which is another great thing about a checking account. You can actually do it with a savings account too, but you can direct deposit your Social Security income, your paycheck, really any regular kind of income coming in can go directly into the account, which is super convenient.
Yeah. When you were talking about tracking earlier, that reminded me that I've seen lots of banks are making it even easier to understand and providing
Mhm.
like budgeting options. They'll
Right,
make like pie charts and they color code it. And they're like, this is how much money this month you spent on food or
right.
entertainment or like charitable giving. So that's pretty cool too that your checking account can do that.
Yeah, I love that. And mine, actually, they let me put in budget amounts. So it's like, I expect to spend this much. And then they say, this is how much you did spend. Super easy to see if I'm on track or not with my plans.
Yeah, that sounds very useful.
Yeah.
So, Nancy, traditionally, people with disabilities are more likely to be unbanked or just not have
Mhm.
any kind of bank account than people without disabilities. So, if that is true of someone on this call, why should they consider having a bank account? How is this going to make life, better, easier for them?
Right, right. So there's a lot of reasons why it's easier to have a bank account. I'll just go through a few and see if folks have other questions too. But, first and foremost, like you've been sharing and we've been talking about, it is an easy way to manage and protect your money. It's going to be safe, it's going to be secured, it's going to be insured by the federal government. So you can't really beat that as a place to put your money for safeguarding it and ease of use. And nowadays, in the old days, checking accounts cost a lot. Nowadays, you can find a checking account with a very low monthly fee, like $5 a month. And if you think about all the things you can do with that checking account, like write checks, use an ATM, use that debit card, that's a lot of convenience for a pretty low cost.
Yeah.
And
And that
some,
debit card can do online shopping. And so
right.
for people, because of the pandemic, you can't really go out very
Mhm.
much. You'll still be able to pay for things. And you can't do that
Exactly.
with cash online.
That's an excellent point. It's safer from a health standpoint, to not have to go and interact with someone in a shop. That's right. That's right. And we talked about, so another good thing about banking is that you can track your spending. Like if I don't have a bank account and I'm transacting in cash, I'll be honest, I have a hard time tracking what I spend my cash on. It's just my nature. I do better if I'm using my debit card or I'm using my checks, I just have an easier time tracking. Cash, I say cash is like, for some reason, I just have a hard time tracking on it. So that's a benefit of having a bank account is you don't have to transact in cash if it's hard to track. You still can if you want to, but you don't have to. And the other thing is like if you're transacting in cash all the time, that cash could get stolen. It could get lost. It could get burned up. So it's just not that safe, right? So a bank, it's going to be safe there.
Yeah.
And you talked about the debit card. So even if you lose your debit card, you can lock it. And so if somebody finds it, they're not going to be able to use it. So it's like doubly safe. And then I think you're going to talk about credit, maybe next week or something.
In a few weeks, yeah.
In a few weeks. Mm-hmm. So when you have a bank account, what you're doing is you're building a relationship with a bank or a credit union. They're getting to know you. And so when you're ready to build your credit, that relationship is really going to help you be able to get like a small dollar loan or a credit card so you can start to build your credit. So that's sort of the relationship aspect that sometimes folks don't think about. But when you want to build your credit, you want to have a relationship with a bank or a credit union to make that easier.
Yeah, so it's helping you build that trust so that when you need something else, maybe something, fancier like that loan, you're ready to go.
Exactly.
Excellent. So another thing that, comes to mind for me that makes that's a good reason to have a bank account is just thinking about the past year and those COVID stimulus checks that came out. So I have a checking account and the IRS knows about it because I always have my tax return sent there, direct deposited. So when they started issuing those checks, I got mine within a couple days. But for people who didn't have a bank account, I heard it took like weeks to months to get it. And it sounded like a huge pain. And especially since so many people were struggling, like if you needed that money, you needed it in like the next 10 minutes. Like you didn't have weeks or months to wait.
Right. Yeah, you're absolutely spot on. So if you don't have a bank account and you're getting this kind of a stimulus payment or even a tax refund, it's going to be delayed. The IRS will do the best they can, but they're going to send you a check or a debit card, and it's going to take longer. If they send you a check, you have to cash it. You could deposit it somewhere, but not if you don't have a bank account. If you cash it, now you have all this cash on hand that's at risk of being lost or stolen and harder to track how you're using it. So in so many ways, having that account is going to make you have your money safer and access to it sooner so you can use it for those essential things that we all need during these days.
That speed is very helpful for sure.
Yeah.
All right, so when I'm deciding, to get a bank account, how do I choose between the different banks and credit unions that are out there?
Yeah, it's a great question. So there's sort of a couple ways to think about it. You're going to have to research what's available to you. And the way I like to encourage people to start is to think about how you want to access your bank or credit union. So for example, do you want to be able to go to an ATM anywhere in your town, or you just want to go to an ATM in your neighborhood? Do you want to go into a branch and talk to people, or would you prefer to do your banking by phone? Are you going to want to use an app on your phone to do your deposits and check your accounts? Do you travel a lot? Do you want to be able to go to your bank in other states? So these are like questions you want to ask yourself around access and use, like what's going to be convenient for you, and start to think about, okay, given what I want for access, which bank or credit union is going to meet those needs. Then you want to think about what products or services am I going to want to use? So for example, do you want to get a credit card? Do you want to apply for a car loan? Are you thinking about getting a mortgage? So then you would reach out to your sort of short list of banks and credit unions and say, hey, what kinds of interest and fees are associated with those products? So you can see which one is going to have the best products for you. And then the third thing, which I just can't emphasize enough, is ask your friends and family and coworkers who they bank with, right? Because so much of it is about how folks are treated for customer service. And the best folks to tell you that are people who are the customers of the bank or credit union. So there's a lot to be said for asking for references from friends and family. Who do they bank with and do they like them? And if they do, you should probably keep them on your short list and then call around and see how they're interacting with you to help you make those decisions.
Yeah, that's great advice. It sounds pretty similar to what I did when I turned 18 and, needed a bank account. I went away to college. I was far from home, but there was a little bank branch right on campus, and they had ATMs all over it. So immediately opened a bank account with them. It was so convenient that I always knew where to find one. And I didn't have a car or anything, so it would have been a pain to go somewhere else. Uh, Apps weren't really a thing then. I definitely did not have a smartphone, even if it were. So being able to have that in-person access was huge. And then when I graduated, I didn't know what part of the country I was going to live in. I've lived in a couple different places. So it was important to me that I could, still get access to this bank account. And it was a national one. So I was able, that worked out for most places. And after, that history, I felt like they had treated me well. I felt like I had built trust in them, like you were saying, with that relationship. Um, so yeah, totally can understand. And I've kept using them when I needed a car loan. I made sure to reach out to them. And it's that the relationship, the access is huge for sure.
Right. And the other thing is that it's really kind of a hassle to change our banks. So you want to make the right choice to begin with, because once you've set up these relationships, maybe you've got your direct deposit, maybe you're paying some bills with their bill pay system, it can really be a hassle to move to another bank or credit union. So you want to try to make that decision right in the first place so you don't have to change.
Yeah. Is it okay if I have accounts at different banks and credit unions?
Definitely, definitely. And that's actually a really smart way to save, because what some folks like to do is they put their checking account at one bank or credit union, and they put their savings account at a different one. So it's kind of like out of sight, out of mind, like make it hard to get to. So savings experts call it making your savings sticky, meaning like make it hard to get out of your savings account, because then it will grow for you and you won't be tempted to use it for something other than your goals. So it's absolutely fine to have accounts at different banks and credit unions, just as long as you can keep track of them all and manage them all well.
Yeah. And I want to point out to people that it's not impossible to get a hold of your money from, a savings account at a different bank. It's just, it's like there's a couple more speed bumps. It's a little bit harder. And so just that hassle will, might keep you from spending it when you don't really need to yet.
That's right.
So what are these interest rate things? People have probably heard of it. It quickly becomes confusing.
Sure. So let's talk about interest rates. So in the banking world, the word interest rates, or the words interest rates, are really applied to two different things. One is the interest the bank pays you to put your savings in their bank or credit union. And the other way that the word is used is it's the amount the banks charge you to borrow money. So I'm going to leave that to your credit class in a couple of weeks. So I'm just going to talk about interest on savings. So the bank or the credit union really wants you to put your money in their savings, in your savings account at their bank, because they use that money to make loans. So to motivate you to put money in savings, they pay you an interest, and it's based on how much is in the account. And it's basically money you earn. It's yours, and it helps your savings grow. Now, the way that interest rate works is the bigger the balance in your savings account, the higher interest they're going to pay you. So for example, if you have $100 in a savings account, maybe the interest rate is, quite small, like 0.5%. But if you have $1,000 in a savings account, then the interest rate could be 1%. Now, those aren't huge amounts, but it's money you're earning. And then the other thing they do to help you save and to encourage you to save is they can have special savings accounts called certificates of deposit that will pay even more interest to you. And the deal with the certificate of deposit is that you agree with the bank to leave your money, to leave your savings in that account for a period of time, let's say for 12 months. So you promise not to do any withdrawals, to take that money out for 12 months. And to reward you for that, they're going to pay you a little bit of a higher interest. You can still get the money out if you need to. It's just you won't earn that interest. They call it the penalty. It's just that you're not going to earn the interest. But it's a nice way to grow your savings and know that over time, you're going to end up with more money to really reach those goals.
Sure. So sounds like interest would be another thing that you can compare between the different banks and the different types of accounts, since some are more generous. It's their way of trying to get you to do business with them instead of somebody else. Kind of like a sale that different stores have, but also kind of the opposite for banks. Yeah. How does it tie into like this federal interest rate?
So the federal interest rate, do you mean like the federal overnight prime rate, or
Um,
like maybe what the Treasury talks about?
the one that comes up in the news a lot.
Okay, yeah, right, exactly. That's very good. So the Treasury helps banks to have enough money, literally dollars in the accounts for when you and I or any of us go to the bank and say, I'd like to withdraw $100. So the Treasury helps banks to balance that to make sure there's always enough money there. And they charge the banks a little bit of money to do that. So then when the bank thinks about how much they want to offer you to keep your money, because that's probably better than having to borrow from the feds, then the bank's going to say, okay, I could borrow it from the feds for 1%, but I'd rather Kaylin or Nancy gave me their money. I'm going to offer them a little more than that on the savings. So that's sort of how that works out, the relationship there. So it helps to set the interest rates on savings accounts, also on loans. So it is interesting to see if the Treasury is raising that rate. That may mean that you might get more interest on your account. If they're lowering that rate, you're probably going to get less interest on your account. But banks also will agree to keep an interest rate for a period of time. So you don't have to worry too much about it changing over time, but you're right, they are related because of the relationship the bank has with the Treasury.
So I bring that up because I wanted to explain the interest rate that we have in our Able Cash option. And it is tied to that federal interest rate, which is currently basically zero because the economy is not doing great right now. So that means that our own interest rate is zero, unfortunately. Back before the recession, our interest rate was actually like really good. I want to say it was just under 2%. My own bank accounts were like 0.2 or 0.02. So that's the one time in life when two actually sounds like a really big number. But when the economy went down, the Federal Reserve lowered that interest rate. And like you were saying, it ends up affecting us. So for anyone using our cash option, as the economy gets better and the federal interest rate goes back up, ours will do. And then hopefully I will once again be able to tell you that it's better than my own bank account.
That's right. That's right. Yeah, it's a challenging time for anyone to be able to earn interest on their savings. And so the ABLE account has so many benefits other than that, hopefully this will not discourage people from using it. It's such a great program as a way for folks to build up that savings for their own uses, their own choices. So I'm a big fan of the ABLE account.
Well, thank you, Nancy.
Mm-hmm.
Great. So a lot of people with disability community don't always trust banks and credit unions. You know, maybe they've been burned before, or you know, maybe they weren't able to get a bank account before, something else weird happened. Why should we trust them?
Right. I mean, that's a good question. So, fundamentally, you can trust them to safeguard your money and to safeguard your personal information because they are regulated by the federal government. So they're examined. Literally, people come in and check their books every year and make sure that they have the right computer systems to safeguard your information. And the banks and the credit unions spend a lot of time monitoring to make sure that you're not a victim of scams or fraud. So from that standpoint, there's a lot of reasons to trust them to safeguard your money and to safeguard your personal information. Now, there's also, as you mentioned, a dynamic around, it's possible a bank or credit union didn't treat you well in the past. And so that can damage trust. And I get that. What I would say is try another one, right? So again, ask friends, ask family, ask coworkers who they bank with, and call up that bank or credit union and just see how they treat you over the phone. If in the past a bank or credit union has not let you open an account, find out why. Sometimes it has to do with not having the right identification. Sometimes it may be because you had an old bank account that you didn't pay all the fees on, or it could be, in the extreme case, if someone has had a crime that is fraud against a bank, like, forging a check. Okay. But if you know why a bank in the past said no to you, call up a new bank or credit union and say to them, this is what happened in the past. How would you handle that? And they might say, oh, you have a state ID, you have a social security number, you have a piece of mail with your address on it. That's fine for opening a bank account. Come on in, right? So I would say give them a second chance because the convenience and the safety can really overcome what may have been a bad experience in the past.
Yeah, and I've noticed this especially with credit unions, but some of them will try to target certain audiences. So they might specifically be trying to help, low-income people who don't have a lot of banking history, or maybe refugees or different immigrants, and so they'll offer services that are going to be more helpful for that. So for instance, some of them have credit building accounts, which we will talk about more next time. But basically, they're helping you build your credit score while you're saving. They're trying to help you get on a good financial footing. So they'll have different services that might be more helpful for you. They also, those targeting refugees or other immigrant groups are going to have more language resources probably. And it also means that their customer service has a better idea of what your life is like, instead of a group that doesn't really understand it. So they could potentially provide better customer service that way too.
I think that that's an excellent point. When you see that a bank or credit union is willing to take what you would call alternative IDs, then you can pretty much think they're going to be a little more kind and compassionate when interacting with customers, right? So alternative IDs are things like individual tax identification number or a consulate identification from like the Mexican consulate. So even though that might not be your specific case, if you see that, it's kind of an indication that they're going to be able to work with you to get you successfully banked. So I think you make a really good point there.
Yeah. So I've seen, more and more over the past few years, these online banks that pop up.
Mhm.
And they're online only. You can't, walk into any building. Um, should we trust these? What's the deal with that?
What is the deal? So it's a great question. It goes back to what we were discussing earlier about the Federal Deposit Insurance Corporation. So first and foremost, you want to make sure that they are absolutely insured by the FDIC. So you look for that logo on their website because that will let you know that they're working within the federal regulation of the banking industry. So they're going to do the right things. They're going to follow our laws, and any money you have there in that online bank will be insured by the Federal Deposit Insurance Corporation. So number one, look for that. If that is not there, then no, do not bank with them, right? Do not trust them. And then once you know they are FDIC insured, it really comes down to a matter of what is convenient for you. So an online bank that doesn't have branches may be able to give you lower cost products, may be able to give you a little higher interest rate on their savings accounts because they're not paying for their buildings, right? That's sort of the idea. But the challenge is, I think, let's say you have a problem. When you call them, are they going to be really responsive? Maybe, but it's not quite the same as walking into a branch and talking to somebody. If that's not important to you, that's fine. But just sort of think through in the worst case scenario. Let's say my debit card is stolen. I need to make sure my money's, safe. I need, where's your comfort level? Are you going to be okay on the phone talking to someone? Or do you want to have that personal interaction? So that's really where I think about online banking. For some folks, it's absolutely fine. And as long as it's FDIC insured, it's safe. But it's really about how you want to interact with them.
Yeah. So I do use an online credit union on top of a physical bank, and like you were saying, I've seen higher interest rates there, but I can't physically go and have a conversation with someone. But with this one, luckily, they have great customer service. I've had phone calls with them, and it feels to me like it's just as good as in person. I was opening one of those certificates of deposits like you were talking about. So I was going to lock away some of my money for a certain time period so that it would grow more. And she was getting that set up for me. And then she called back later and she's like, actually, if you put it in this savings account, it's not locked up and you get a higher interest rate. Like, would you rather do that? And I was like, yes.
Wow.
I'm surprised that you are letting me know that. But yeah, like that sold me. Like this
Yeah,
is clearly a good relationship to keep up.
that's
So
right.
like
That's right.
they can be great. It just is gonna depend on which one you end up going with.
That's right.
Um, okay. So what about, a lot of physical banks have online banking as well.
Mhm,
So what
mhm.
should we keep in mind for that? How do we make sure that both our information and our money is safe?
Right. That's a great question. So there's a couple of things when you're using online banking services that are just really important to know. And this is of special interest to me because I love talking about how to protect your identity from getting stolen, right? Because there's a lot of that going on. So the first is when you're going to use your bank and their online service, make sure that you're initiating going to their website. In other words, you may do a Google search, but don't take the first or second entry that come up that are ads. Go a little further down and look for the proper web address that is actually your bank or credit union, and make sure that the website leads with that HTTPS, because the S stands for secured. So first and foremost, make sure you're going to the right web page. Also related to that is don't open a link from an email that comes to you that says, this is your bank emailing you, click on this link to get to our website, because that could absolutely be a scammer, right? Banks generally don't send you an email to say, link through to the website here. So don't just open links from emails. Make sure you initiate the access to that account, to that website, and that there's an S in the HTTPS part of the website address. And then when you're signing on, do use what they call the two-step verification. Now, I will be the first to say it's kind of a pain, but the idea is, you put your username in, you put your password in, and then it says, I want to send you a code to your phone or to your email account. That's the second step they're using to verify you. So you go ahead and do that. You get the code from your phone, and then you put it into like the third field on the website. Really, really, probably the most important way to safeguard your online accounts is using that two-step verification. I've really come to appreciate it in this past year because there's been so much scamming going on across the country, and that all the experts like the Federal Bureau of Investigation say it's that two-step verification that will really safeguard your personal information when you're going online like that. So let's say now you're in the bank's website, you're accessing your account, you're doing your business, you're reviewing things, and you're done. When you're done with your session, log out. Don't just click the close button, literally go and log out. So that closes the session with the bank, and then close the browser. So in other words, if you used Google Chrome, close that browser.
Not just the tab, the whole thing.
Correct. Not just the tab, the whole thing. That will really sort of break the session so that no scammers can get in there. So those are the few things to do. And then of course, you've got a password. Don't write it down on a piece of paper on the desk. Don't put it on the back of your debit card, right? Like safeguard that password and do change it every 2 to 3 months. And the same is true, like if you want to use a phone app for your bank or credit union, only download the app that's on either the bank's website, it says download this app now, or from the Google store. Don't accept an email that says, oh, here's your bank's new app. No, right? That absolutely could be a scammer who's trying to get their app on your phone. You also want to safeguard your phone if you can get a password on the phone to lock it, or like I use my finger now, like my finger. Well, yeah, my fingerprint. Thank you.
Yeah.
And the same is true. Like use that unique password. Don't write the password down. Log out and close out that app every time you're done with it. And then really the final way to safeguard your online access is do monitor the account pretty regularly. Like I look at my checking account at least once a week. And if I see something funny, I call my credit union right away and let them know. So that's really helpful too, really for any kind of transactions. Keep an eye on that account on a weekly basis. If you see something unusual, you see something you don't recognize, call your bank, call your credit union. They will work with you to sort out what's going on.
Yeah. And I want to point out to people that you want to be careful with your text messages too. Scammers keep getting really creative, which is really frustrating. The past week, it feels like every other day I've gotten a text message trying, I think something about a car, something about a debit card, but they keep calling me Brady, and it's on my work cell phone, so they're doing a very bad job. But don't click on any links and any messages like that.
You are right. That is very funny that they're calling you by the wrong name. But what they're doing is they're sending out like 50 million texts. And if they get 5 people to click on them, they've won, right? Yep. So yeah, absolutely. You don't know who the sender is? Delete it. Don't answer the phone. Don't open any links in your emails.
Okay, so what about stuff like Venmo and PayPal? I read recently that especially for younger generations, they're using more of these fintech or financial technologies. And some of them are skipping traditional banks because they feel like they have it covered.
Right. Yeah. I think it's really interesting. I have a Venmo account. but I use it in a very specific way. So the thing about Venmo's owned by PayPal. So
Okay.
this, what I'm going to share is sort of true of both. They're not banks. Let's just say that. So, so they're not federally insured. So if you have money sitting in a Venmo account, just sitting there on that account, and something happens to Venmo, like it goes bankrupt, there's no federal insurance program to safeguard your money. Now, there's some exceptions to that. If you use the Venmo debit card, that actually is backed by a bank, and then the insurance would be there. So it's kind of like how you're using Venmo as to how safe your money is. But I would, be really careful about just leaving money sitting there in that Venmo account. I like the convenience of being able to pay vendors and friends and colleagues using Venmo. But what I do is I link it to my bank account. So I don't have to have money sitting there to be able to send money to people using Venmo. When I send money to people using Venmo, it takes it from my bank account, right? So I don't have to have a bucket of money there. That's the other thing about having a bucket of money sitting there, like, can you access it easily? It's kind of limiting your access because not everybody takes Venmo. If you don't have the Venmo debit card, you can't go to an ATM and get it out. When you do go to an ATM to get it out, there's going to be a fee, most likely. So there's, some pros and cons. I like the convenience of it, but I would be careful about the safety of it. And rather than just have a Venmo account, you may want to get that checking account and link the Venmo account to that.
When the money's sitting in Venmo, there's no interest either.
Oh, no,
Yeah.
no.
So it sounds like probably too much risk for reward to me. I do the same thing as you. I connect the bank account, and then when
Mhm.
people send me money, I immediately move it to my
Yes,
bank
swipe it
account.
out of there. That's right. You're like, why should Venmo be holding my money? I mean, I'm just sort of that way. But I think it's fine. I just wouldn't have it be my only way of transacting, I guess
Yeah.
is the way I think about it.
Yeah. So what other options do people use when they don't have a bank account?
Yeah, there's really, it's a challenging way to function and it's an expensive way to function. So if you don't have a bank account, you're probably using check cashing services, which they're going to charge you 2 or 3% of the value of your check, which that's real
So
money. That's real money. Yeah, that's not yours. Then again, you've got that cash sitting around, which could get lost, could get stolen. If you're like me, it's hard to track how you're spending it. And then what folks also do sometimes when they don't have a bank account, if they need to pay a bill, let's say they need to pay their rent check, but they have to mail it, then they might have to buy a money order. So a money order is like you've purchased a check. So you give that money order provider the cash and they write a money order that you then mail to your landlord. Again, you pay a fee for that. And so you're spending more money on those transactions than if you had a checking account. Then the other thing, we talked a little bit about this, but when you don't have a bank account, you don't have access to affordable credit like a small dollar loan. And so you have to go to places like a payday lender or a car title lender. And those are really expensive ways to borrow money. And you're borrowing for a really short period of time. So it's very hard to be successful and successfully pay off that payday loan and sort of balance out the cash flow problem that caused the issue in the first place. And this really burns me, when you are successful with the payday loan, it doesn't get reported to the credit bureaus, so it doesn't help build your credit. So you try
like,
really hard, yeah.
yeah. So even if you do well, and then it doesn't help you get better loans in the future.
Exactly. It really ticks me off. And then the final one I'll talk about that really is the rent to own. So I know it's tempting. You want to have that nice furniture, that nice TV, and it looks like the monthly payments on rent to own are affordable. But the reality is you're actually paying a very high transaction costs associated with that monthly payment. It turns out to be very high interest. You're paying for years. It could take like 4 years to pay off a rent to own couch. If you miss a payment, they can repossess the couch. So then you've had nothing. You've made all those payments and you don't even have the couch. It's likely the couch, well, it's possible the couch is not new. Maybe they repossessed it from somebody else. So you're not even getting a new product. And once again, the rent to own payments aren't reported to the credit bureaus. So even if you're doing a really good job with your on-time payments, you're not getting your credit built as a result. So rather than rent to own, think about saving the money so you have enough, or you could do installment programs, which are different than rent to own. Or you could try to get a small dollar loan from a bank or credit union, and they'll report that to the credit bureaus for you.
Yeah. So with the using a money order to pay for your rent, another thing that's not great about that on top of the fees is like you have to do that every single month. You have to go
Right.
somewhere and wait in line and take time out of your busy day for that. But if you have a checking account, they give you a whole stack of checks that I mean, mine last for a very long time.
Right.
So you only
That's
have to
right.
worry about getting new checks like maybe once a year. So
Right.
it seems like just so much easier too.
That's right. And the other thing about money orders, I'm not like anti-money orders, but just so
They
people
come in
know,
handy, but
they come in
sometimes
handy
it's good.
sometimes. But if that money order gets lost
Mm,
or stolen, it's very hard to stop payment on a lost or stolen money order. Whereas a check, if your check that you've sent for your rent gets lost or stolen, you call up your bank or credit union, you say, I want you to do a stop payment. And what they say is that they basically say, we won't cash that check, we'll let you issue a new one. Sometimes there's a fee associated with that, but at least it's safeguarded that rent payment for you.
yeah, like I've definitely used money orders, but only when I had to, when whoever I was paying required it.
Right.
So it's kind of like, eating dessert. You shouldn't have it all of the time. You should save it for special circumstances. Uh, I'm not great about that part, but think of it more that way than like your vegetables. You don't want to, you want it's expensive if you're using it every
Mm-hmm.
day, every month.
That's right. Yeah.
Um, so can you tell me a little bit more about like payday loans and those title loans? I've heard people call them predatory, so I want to make sure that everyone knows what exactly they mean.
Sure. And I'm actually glad you mentioned this because I want to say again that our division regulates payday loans and title loans. So if people have any questions or concerns, they can call us and get questions answered. And if they have a problem with the payday lender, we can help them work through that. So the way a payday loan works is if you have a job with a paycheck and you can show that, pay stub to this lender, you can borrow up to $300 for 60 days, and the interest rate is 36%. Might not sound like that much, but actually it's pretty high. And the challenge is you have to pay it back within 60 days. Now, usually people go to use a payday loan when they've had some kind of emergency, there was an unexpected expense, it's messed with their cash flow, and they're like, I just need this for a short period of time. I totally get that. And it's convenient, but it's very expensive and not very flexible. So you have to pay it back. And that cash flow problem you had may not be solved in 60 days, right? So you really want to think about what's going to happen when I paid back that loan. How am I going to overcome that cash flow problem that happened in the first place? So some alternatives is think about, can you possibly borrow from family or friends? If you have a bank account, increasingly banks and credit unions have small dollar loans they'll lend you with better terms, like 6 months to pay back instead of 60 days. And maybe you need to just sell something for, to make a little bit of money to get through that cash flow problem. Because the challenge with payday loans is they're very expensive and they're for a short period of time. So it's hard to be successful with them. The car title loan is a very similar loan as far as the terms, $300, 60 days, 36%. But instead of your pay stub being the thing you show the lender, you give them your car title.
Title is the ownership of the car, right?
Correct.
Yeah.
Yes. So It's called collateral because it means if you don't pay that loan, they'll take your car. So kind of a high risk loan if you need that car, if you like that car, if you want to keep that car. So very similar to a payday loan, but instead of showing them your pay stub, and the reason you show a payday loan to your pay stub is they're going to automatically take that payment when you're paid, right? So a title loan, they're going to take your car if you don't pay back that loan. So kind of challenging too, if, you know, as I say, if you need that car, you may need it to get around. You probably don't want to lose it. And it's a pretty expensive way to borrow money. Totally understand people have emergencies, but, you know, for me, it just gets back to that, having that relationship with a bank or credit union and having a little bit of an emergency fund in the savings account to help you weather those kind of emergencies.
Yeah, so it sounds like overall it's way better if you can save up and you have an emergency fund sitting so that when emergencies do happen, you have some place to rely on. Hopefully what's in your emergency fund will cover whatever you needed for that time. And like, emergencies are going to happen. You know, just think about the past year, like none of us saw this coming. It's very hard to prepare for it. And there are millions of people all over the country who are in really hard places financially right now. Those that had an emergency savings plan are in a slightly better place.
That's right.
I want to go ahead and make a pitch for our next session. We're going to have someone from Northwest Access Fund come and talk to us. So this is a community development financial institution, a CDFI. It's a nonprofit specifically designed to help people with disabilities, and they lend money. Most of their loans have been around assistive technology, but they have this amazing one right now. During the pandemic, they started these COVID-related funds. It's 0% interest rate. So they're not charging you anything because they realize that things are very difficult, and yeah, it's a nonprofit. They're truly trying to help you. So that right now, that might be a better option while the pandemic is continuing. So I would definitely check them out, Northwest Access Fund. And then I believe it's April 26th, we'll have someone from there come and talk to us about credit, and they'll tell us more about the kinds of loans that they offer. So I think we've pretty much hit everything I wanted to talk about. Nancy, is there anything else you want to make sure everybody knows?
I think we've just covered a ton. I really want to thank you for giving me this chance to have this conversation with you. If you're okay, I'm going to plug DFR's advocates one more time. So again, it's a free service for consumers. Even the phone line is free, and that phone line is 888-877-4894. That's 888-877-4894. So you can call the advocates if you have concerns or questions about your financial service provider, your insurance, you know, all the different industries that we regulate. And you can find more information at our website, dfr.oregon.gov.
All right, great. Okay, so for everyone here, thank you so much for joining us. We're going to stop the recording now. So if you have any questions that you didn't feel comfortable asking before, feel free to throw those in the chat or the Q&A. Otherwise, I hope to see everyone April 26th when we will talk about all things credit.